out and post it later. Allison, are you able to share your screen? Because right now we're not seeing it.
All right. Yes. Happy to share my screen. I thought I would just start by chatting a little bit, but let me do what I'm being asked. Can you guys see my screen?
Yep. And if I would like to ask everyone to mute themselves unless they're wanting to ask a question, please.
But I do have a question. I have my own question. Oh, there we go. I was going to see, how do I make that a little bit smaller? Make sure nothing is covering it. Great. So I'll start for a moment on, you can see me as well, yes? I'll start for a moment on who I am before I jump into Connecticut Innovations, because I think that we have a good 20 or 30 or whatever minutes. So we'll just start for a moment on who I am, and then we can jump into CI and some other funding options. So I'm Alison Malloy. Prior to being an investor, I was an entrepreneur myself, so that's kind of fun. So it's been nice to wear both hats. And honestly, Mike, I'm wondering if this actually came from Mike Rohr. I don't know, but this is like, I don't know if you guys can see this, but this was like 2003, it says. This was during like the CVG days, Smart Startup Venture Forum in Connecticut. So I don't know if this is from Mike Rohr, but thank you. Right, Mike's been around for a while. Doug Campbell's been around for a while. But so Alison Malloy, I had a startup company here in Connecticut, tech startup, software company called Design to Launch. And it was a workflow solution that managed the routing and approval of packaging and labeling for the pharmaceutical space and the CPG space. So everyone from Pfizer Pharmaceutical, Abbott Labs, AbbVie, Johnson & Johnson, Colgate, Palmolive, Bausch and Lomb, you name it. They used the solution to route and approve packaging and labeling, artwork, ingredients, new products that are going out to the market. So I had been bouncing around, living in a couple different countries. I had been with GE Capital and Arthur Andersen. I was living out in LA and decided to start a startup company, decided to move back home to Connecticut. I'm from Stamford, Connecticut. So moved home to Connecticut to raise funding, figured that wherever I was going to be building the company, I needed to commit to for, call it at least 5 years, right? 3 to 7 years. And I figured that Connecticut had some good VCs at the time, and we have up to 26 now. And so, yeah, so launched that company, raised venture capital money. I was backed by 3 VCs here in Connecticut, and went on to have a fun ups and downs and roller coaster ride, like I'm sure many of you either have experienced or will experience. And luckily, at the end of the day, I will say I was backed by fabulous investors, not only the VCs, but I think we were the angel deal of the year. We were one of AIF's first investments ever. We were Golden Seed's first investment and first exit ever. We were backed by Commonwealth Angels and New Jersey Angels and New York Angels. And, you know, if anybody knows David Rose and a bunch of other folks. So anyway, neither here nor there, sold the company in 2008 to Eastman Kodak Company. So that was a really fun exit, and negotiated to keep the company here, and eventually transitioned it in, spun it back out with a private equity firm out of LA called Diversis, merged it and consolidated with a couple competitors, and then sold it the second time it was sold in 2018 to Danaher. So fun little story of entrepreneur before I jumped onto the investor side. So Connecticut Innovations, I was actually backed by one of their fund of funds, so an earlier stage investor through Connecticut Innovations. But I've been with CI for quite a few years now, and I'm on the venture team. So I'm one of the check writers. There's give or take 8 or 10 of us check writers. And many of you probably know Connecticut Innovations, but I'll take a moment or two on hitting some of the highlights. So CI is Connecticut Strategic Venture Capital Arm. We have been around for about 30 years. We have about $500 million of assets under management, so 500 million of assets under management. We're an evergreen fund, so we can reinvest our proceeds. Had about 30 million in proceeds in the last 2 quarters, about 130 million in the last 2 or 3 years. So we get to reinvest our proceeds, which is fun. We also received about 120 million in funding from the state through the federal government by way of SSBCI dollars. And we are deploying those dollars into 3 different areas, which I'll touch upon in a moment. But we are one of the most active early stage investors in the Northeast as it relates to number of transactions. We do about 100 deals, 100 transactions, 100 investments per year, about 25 to 30 new portfolio companies we bring on each year. Our check size could be as small as 100,000 for a proof of concept, through to call it 2 million for a first check. Say our bread and butter is probably about $1 million for a Series A raise. We like to be ideally about a third of the round. So put $1 million into a $3 million round. And we have a lot of dry powder for follow-on. So can put upwards of 10 million, call it, into a company over the course of a couple of rounds. We have most of these things I already hit. We have more than 200 companies in our portfolio today and growing. It says about 225. I think we're almost up to 250 portfolio companies. I mentioned that we're an evergreen fund, and we invest about 40 to 50 million each and every single year. It's a lot of dollars to put out, a lot of work to be done. Since we're backed by the state of Connecticut, we do have a mandate that the companies we invest in have a presence in Connecticut. So what that could mean is ideally the headquarters are here, the CEO, a co-founder, an executive that's building out a team or a department. Probably about 10% of our companies are international, where their world headquarters are in their home country. We have a couple of companies out of Canada and out of Israel and other countries as well. And in those situations, we're looking for opportunities that are ready to expand into the United States and want to put a headquarters or US subsidiary in Connecticut or an office in Connecticut and hire some people here in Connecticut. Some of the things that we look for as we're making investments are, the team first and foremost, right? The idea that the company's high growth, making progress, gaining traction, run by, a fabulous team, either that's had success in the past with another venture opportunity or in their careers or in their sectors. And I think that I mentioned that we do follow on rounds. So we like to syndicate our deals. We also do fund to funds. So as VCs are starting up, if they want to put their headquarters here in Connecticut, we can look at participating as an LP in their fund. Today, I think we have about 26 plus VCs in Connecticut now. Some of the areas that we help with are not only making the investment, but also recruiting talent for our portfolio companies and making introductions. So we have a full-time recruiter who helps our companies look for new talent to hire heads in Connecticut. And we also have a program called InLabs, where we help our portfolio companies with introductions or pilots in the state or in areas that would be helpful for them. I'll mention that we have a couple of different funds. So we used to be divided between bioscience and technology. Our bioscience fund is our CBIF fund. Our technology is our Eli Whitney. And then recently, with the dollars that I mentioned that we received from the state through the federal dollars for SSBCI, we created 3 areas. One is venture debt, where we can give basically loans to companies that are cash flow positive and looking for growth capital. And we also created 2 new funds that fall under our tech fund. One of them is called our Climate Tech Fund, and that's run by my colleagues, Constantine and Drew. And the other one is the Future Fund, and that's one that I spearhead. So it's one that's near and dear to my heart. And the Future Fund is the $50 million fund that's focused on diverse founders. So again, we have 500 million of assets under management. We're deploying from each and every one of those funds. The Future Fund just happens to be one that I'm loving these days, in addition to all of them. Some of the stuff that we're looking for, I mentioned, growth and traction in the market, strong management teams, just disruptive technologies, things that are having clear differentiation. Those are just some of the stuff. This is a little bit about, these are the folks that are running the Future Fund team, but that's just one of our funds. So before I move off of Connecticut Innovations, I will just let me think for a moment on anything else that I want to add there, right? We help with talent, we help with recruiting, we have several different funds. We're sector agnostic. So we invest in different industries. We're generalists. So we cover the majority of the industries. Some of the things that I gravitate toward are B2B tech, SaaS, prop tech, fintech, insurtech, and consumer products these days, consumer product goods. So let me hop in for a moment on just some other areas of funding around the state that I think could be of interest. Tidal River is a new angel group. So we have 2 angel groups, maybe more, but at a minimum, 2 angel groups that we know well. Our AAF, which we mentioned earlier, Doug Campbell's a part of, and some other folks here are a part of, I'm a part of, and Tidal River. Tidal River, I started with Governor Lamont's wife, Annie Lamont. Annie, who's the first lady of Connecticut. She is a fabulous venture capitalist in her own right. She's with Oak, and she and I were looking across the room often and seeing that there were more men than women in the investor world, and thought we should maybe pull some women together and try to get some more women writing checks and on cap tables and doing due diligence together and supporting companies. So Tidal River has been cutting checks for the last couple of years, and they just launched a small micro fund. So Galia Guichon and Chris Jelna, Amy Beatty, and other folks have stepped up to manage that member-driven fund, which is fun. And they're writing, call it $50,000 to $100,000 checks into early stage companies here. They do not need to be in Connecticut, but we all love Connecticut, so those are good ones to look at. Another group that we just mentioned a couple of times is AIF, so I'm sure most of you are aware of them. If you're not, you should be. They're a great group. Doug Campbell's involved. Marty Isaac is running it these days, and they meet, I think, the first Tuesday, if I'm not mistaken, of every month.
Second Tuesday, Allison. And
thank you.
You might mention we have our 4th fund, which is $750,000, which is new, making investments, and about 85 members, probably up from 40 a couple of years ago. So it's growing a lot.
Perfect. We should add those bullet points in here. Great group. I was there Tuesday before last, whenever the last Tuesday was. It's really, really well run. They bring in companies from all over to pitch. I love when they throw a Connecticut company in there. They do due diligence together. They screen deals before they put them up. So it's really well run. So they're a good source, and we like to collaborate with them in our early stage opportunities. There's a lot of other groups. So as folks are looking for different ways to fund their companies, I work with lots of people in the ecosystem. I'm going to take a moment or two to share a couple of quick thoughts, and then I just have a couple of extra things, and we can open it up to questions. I don't want to occupy the whole time just talking at people, but we have a group here in Connecticut that you guys may know that's called CTNext. It's run by Oni. Oni does a great job at trying to support the early ecosystem here in Connecticut of entrepreneurs. They also run several programs. So if anyone is looking, for example, for an intern for the summer or the spring, there's a program called the Talent Tech Bridge, TTB, and you can find it on the CTNext website. And in that situation, the program provides a grant up to 50% of the intern's salary. So that's a good way to get people to help you with your ideas or help you with your inventions or your patents or anything that you're working on, where, you know, just half of the money you need to come up with and the other half the state helps with. Again, that's TTB, and ideally that's for Connecticut university students and doing a job in Connecticut. So it's a good internship program. They also have early stage dollars for companies in the ideation phase. I think they're doing $50,000 checks these days. Oni and I are trying to get some time on the calendar to see where he stands with his proof of concept fund. So they don't typically require matching dollars like CI does. And so they have some grants that they give out. So CTNext, I think, is a really good resource. And then, you know, and then there's just a lot of VCs, depending upon the sector that you're looking at, that I'm happy to make introductions or connections to. I think I spoke with 70 VCs over the last several months. Over the last 12 months, I've met with 70 new VCs to try to collaborate with. So as I come across deals or opportunities, we're constantly sharing deals. I'll just run through one or two extra things. I don't really know if much of these are of too much importance, but over the last year, CI invested about 42 million between our tech fund and our CBIF fund. Looks like 536 million was raised in total by 72 companies that are in our portfolio. Here's a valuation of our companies to date. I really think of these a little bit more as appendix slides, so just gonna pop through them. So companies in our portfolio, 230 as of June 30th. So our portfolio is always growing. So supporting them is fun. And, you know, I'm going to pause. These are some of our successful exits recently in 2021, 2022, 2023. So these have been really terrific in returning funds in our Evergreen Fund to continue to reinvest in the future. And here are some of the funds that we invested in. I mentioned that we do direct investing and then we invest in funds. And the idea is to create more VCs here in the state of Connecticut, so that the more, we figure the more check writers there are, the more entrepreneurs we can attract to Connecticut. So here are some good ones these days that are around in Connecticut. And they all focus on different things. For example, Vessi Ventures right here, really focused on fintech. 3 women that came out of the Amex venture space, whereas 1843 focuses on the aging space, or they might call it the silver tech space. Elm Street's been in Connecticut for a long time. Canaan has as well. Bullish is a consumer products good VC. So a couple of promising companies to watch, which is fun. Hallie is CPG, and so is Ellis Brooklyn. Those are 2 of mine, which are fun, and a few other ones. So with that, I think I will pause to see if we can maybe pop into some questions and see what, if anything, I can answer.
Thank you, Alison. I appreciate that. Do you have some idea as to what the return on the investment is for these funds that you've been investing?
Yeah, you know, they're early stage, so most of the stuff is on paper versus, you know, realized. I mean, I would say typically we're hoping to get a 3x, right? That's what funds will come and say. Funds will come and say, we're going to return 3x or we're going to return 5x. Our investment strategy of investing into funds is new. So again, everything's really just in paper. We haven't had any like realized returns, a couple of proceeds that have been returned, but you know, folks are reaching or aiming for 3x. I think 3x would be really great for.
Is that 3x over what period of time?
Are you talking about, just to make sure I'm answering it correctly, you're talking about the funds that we're investing in, correct?
Well,
Or were you
I'm
asking
viewing
about
it
our direct
as an
investments into
investor,
companies?
right? So
What's
as
that?
an if I was buying, for example, a bond that was giving me a risk-free rate of 5.fraction%, I would say that's per year. And so now I'm trying to figure out if you're getting 3x per year or 3x every 2 seconds, or
Yeah, so I'll answer that. So different on our fund of funds is, which I thought was your question, versus our direct investments. But, you know, overall, we'll say 3x is great. So typically that's at the end of the opportunity. So if we're investing in a fund, most of the funds that we invest in are 10-year funds. So they will make distributions along the way, but those are 10-year funds. So you're not expecting to get that money back until, call it, year 10, 11, 12. For our direct investments, we're expecting to hold our positions until they exit, and that can be anywhere from 3 years to 10 years. You know, our bread and butter all day long is looking for a good 3x. That's terrific. Although ideally in venture, we're looking for a 10x, right? So, I mean, everybody's shooting for a 10x, and you figure of the companies that you invest in, a third of them aren't going to make it, right? A third of them are going to hopefully do really well, and a third of them are going to putt along. But we don't make the returns until the companies or the funds exit.
right? Thank you.
There are secondary markets these days. We will look to sell in a secondary. We don't typically buy in a secondary. And a secondary would be if a company is going to do another raise. Sometimes while doing the raise, they offer an opportunity for existing investors to sell some of their current shares. So again, we will look to exit on a secondary. We don't typically buy on a secondary.
Are the finances available online so that we can examine them?
In what sense?
Well, like, you know, that if you had invested in 10 companies and half of them succeeded and the other half went mahala, would we be able to see that in the balance sheet?
I don't know. That's a good question. I don't know where we publish that stuff. I'm sure you could reach out to somebody at CI and ask. I think we probably talk about the exits that we have. I don't know if we necessarily talk about those that don't succeed, but I don't know if we break it down one by one, but I'm sure we have the info somewhere.
Very good. Thank you. Are there other questions?
Yeah, I have a question. This is Scott Barksdale. How do you do a pre-money valuation of a promising technology? I mean, it's a tricky question, right? A tricky answer.
Yeah, absolutely. So we typically don't, and that's the best way. So to be fair, it depends on the stage of the company, right? So if a company is pre-revenue, if it's an ideation phase, if it's early, even if they've started to have some traction, but call it $100,000 in revenue, whatever the case might be, when a company is really early, it's difficult to price it and to value it. And so what we typically invest in, and a lot of investors do, is a convertible note. So there's two vehicles that are that most people are familiar with: the convertible note or the SAFE, right? The SAFE is the simple agreement for future equity. We prefer a convertible note. Reason being that the convertible note has a maturity date, which gives an opportunity as an investor to go and have a conversation. So usually when we're making the investment, a standard investment for us could say, you know, a 2-year maturity date, a 20% discount to the next round, an 8% interest on the money during the time, and depending upon how large the raise is, perhaps a cap. So sometimes we'll go call it 25-30% discount to the round with no cap, or 20% discount to the round with a cap. And if the company's really early and the raise is less than $1 million, then we usually skip the cap also, because having a conversation with a founder about what they think the company is worth that day is always difficult super early. And if the raise is going to be less than $1 million, we assume that the company may not make it that far. So, I mean, they'll make it far, but not far enough that it would have mattered if we had a cap in there. So those are some ways to make the investments. The safes will follow along if it's already in play and money's already being raised on it, and we're kind of the last party to the table. But safes don't have a date that requires an opportunity to come back and have a conversation if the entrepreneur has not been successful to raise their next round where the money converts. So yeah, so I guess we kind of avoid it. For companies that have revenues and have strong revenues and are going for a Series A, then we typically will value the company. And then we'll value the company according to the multiples in that particular sector. CPG valuations are different than fintech valuations, and hardware valuations are different than software valuations. So we'll see what's going on in that particular sector or industry. And by the Series A, it's time to do a price round, typically.
So if the convertible note is executed, the risk lies with the entrepreneur. Who does the risk lie with if the entrepreneur is not able to raise, generate revenue?
Yep. So the way that the convertible note works is that there's a maturity date, and the idea is, so we'll just say it's a 2-year maturity date. The idea is that the money that is being raised will get that company a particular time frame, which usually matches the maturity date. So maybe they're raising for 2 years, or maybe they're raising for 18 months, but you still give them a 2-year maturity date. The idea is that at some point, the company will reach a successful milestone and they will be ready for a Series A. And when the Series A takes place, then the company will be valued, then there'll be a priced round. And when there's a priced round, anybody who's sitting on the convertible note will typically automatically, if it's a qualified financing, will automatically convert into that Series A round, and usually at a discount. So say the Series A ends up being at a $10 million pre, and the note holders have a 20% discount, then they would have a discount to that next round and they would all convert in. If the entrepreneur is not successful in reaching a milestone and being able to raise that next round of funding prior to the maturity date, then a conversation needs to take place. Because what happens at the maturity date is that technically it says by then the money will have converted into a proper round, or the money is due back to the investors. Now, trying to get money out of an entrepreneur that doesn't have it, right? That's not really fun. So what usually happens is there's extension periods. And so you'll vote to extend the convertible note for another year. But for us, if we have convertible notes that we're voting too often to extend and extend and extend, then we'll have a conversation with the entrepreneur and say, listen, maybe this is more of a lifestyle company rather than a venture backable company. Why don't we set up a payment plan over time? Why don't you start to pay back a little bit of that money month over, whatever period of time. So the other thing is that on a convertible note, it sits on the entrepreneur's balance sheet as a liability. So it's a loan. And therefore, if the company were to exit or consider winding down, those note holders technically are first in line to be paid back. Hopefully that answers your question.
Yeah, it was excellent. Thank you.
I think that for early stage companies, it's the easiest way to go, not only from a standpoint of not needing to negotiate the valuation, but also as it relates to cost. So you can get, templates online. What is it? The NVCA, right? That has the National Venture Capital Association that has templates that you can use for convertible notes. Or if you're using a lawyer, it's a lot less expensive to pull together one of those early stage rounds rather than a priced one.
I've got a question for you. How many applications do you get for money over a period of, let's say, 1 year? And
Yeah.
of those applications, how many actually get funded?
Yeah, great question. Previously, I would have told you that we look at about 300 companies a year, but that's grown substantially. I can say that alone, my partner and I sourced about 130 deals last year, just us, and we're only, I think I sourced 85. So since there's 8 to 10 of us check writers, I'd have to imagine that our numbers are growing, maybe 500 or 600. I don't think we've hit 1,000 yet in a particular year, but those are real opportunities that we need to take a look at and, respond to. We see, probably over 1,000 companies, but we don't even, if there's no Connecticut presence, if there's nothing that makes sense, then we say thank you and we point them in the right direction. But companies that we actually look at are well in the hundreds, and we fund about 25 new companies each year. And that's split between the POC and our, and maybe a Series A. So probably about, call it 10 that are $100,000 checks, and the rest of them are Series A. So, we're funding, give or take, certainly less than 10% of what we see, probably closer to 5 or 6.
I see. So it sounds to me like you got maybe 1,000 applications, many of which weren't, which were instantly dismissed because they weren't qualified. Perhaps they were in Connecticut or something, and then you're funding perhaps 25. You're writing like 25 checks a year.
Yeah, the only thing I'll clarify, since we're being recorded, is I don't know if we received 1,000 applications, but like when we go to pitch competitions, right, we see and we talk to lots and lots of people. The ones that maybe that are inbound are probably 300, 400, or 500, or the ones that we're registering, correct. And again, the future fund, we saw about 130 deals over the last 12 months, and we funded 7.
So one thing I noticed in my role as president of the Inventors Association of Connecticut is that I have sometimes become inundated by people with many ideas, some of which are better than others, and maybe that's putting it nicely. Are you finding yourself getting inundated by a lot of people who have a lot of interesting and wonderful ideas? I think the less polite way to ask is, have you become a kook magnet?
No, we like those. We like great ideas. We like that. That's a fabulous, gosh, I would rather have too many ideas to take a look at than not enough, right? For us, we just can't fund them all. And ideas are ideas. And so those really, it's how do we help people get from the idea stage to something that's ready to receive institutional funding? And we do have angel groups here in Connecticut, as we talked about, but even the angel groups are looking for, traction and revenue, or a way to syndicate with or follow, institutional investors or other investors. So the question really becomes, how do you help these fabulous inventors and founders of great ideas become a reality? And those are some of the things that we're trying to help here in Connecticut. So, for example, if the idea is in the climate tech space, there's now an accelerator and group called Climate Haven that CI participates with. There's also a lot of accelerators around Connecticut, depending upon the sector, right? So there's a food and beverage accelerator. There's CoLab. There's also Collab. There's a ton of them, right? So just helping companies and folks get to the fundable stage is tough. So we typically are investing, when the company has some traction, and when there's a little bit of a team and there's momentum. If something's super early, then we welcome them into our ecosystem, and try to guide them, but maybe too early for an institutional check.
And do you have a list of all of the centers that are here in Connecticut? Because I find the Connecticut economic ecosystem is a bit of a dog pile where people are not talking to each other. And you're telling me about these things, and I'm hearing them for the first time. And so this isn't good, because if I don't know about these things, I can't put them on my website. And if I can't put them on my website and I don't know about them, who's going to know? And if they ask me and I don't know, who are they supposed to ask?
I know, it's such a great question. I almost added in one of my slides a list of, not all, but a pretty decent list of incubators, accelerators, early stage investors in the ecosystem. And then I ended up pulling it out as not to inundate you guys. I'm sure I have the slide somewhere. There are just so many fabulous groups in Connecticut. And you're right, it's hard to figure out where they are, what they're responsible for. Some of them are geographically located as well. Like the New Haven, the Greater Foundation of New Haven, and they're doing, right, the New Haven area. There's ones in Hartford. There's sector ones. There are demographic ones. So there's certainly a lot. I'll tell you, I'm hosting this small event for a portfolio company, and I was trying to pull a bunch of folks in the insurance space. And I set the date and started to invite people. And then all of a sudden we found out the largest InsurTech event in Hartford, Connecticut is taking place the same night, right?
Wow.
So there's no calendar that gets this all coordinated. I'll say that AIF does a great job. Marty and Doug and folks do a great job at trying to say, here are some events that are coming up. Like, here are 5 new events that are coming up. Here's a pitch competition at Fairfield or Bridgeport or whatever. But I do have a list of resources. Dr. Lyon, I can get that to you.
That'd be great. You know what? I keep a list on my website, and I hope that everyone will be able to use something useful. So I have a ginormous list, and many of the centers and things have changed their names, or they've gone out of business completely. And the fact that you named a whole bunch that I didn't know about is really important to me. So
There's so many great ones. There's so many. And like Yale has a lot of them as well. Like everybody does. But I will get that list to you, because when a company is too early for us, I don't like to just turn them away. So we've now started to accumulate like a long list to say, hey, while you're not ready for us yet, here are like 10 different resources or 10 different groups that or 20 different groups that you can go chat with.
Terrific.
Roger. I have a good 7 minutes. I told Doug that I'd give you your time back by 6 o'clock.
Okay.
All right. Good. So
or earlier.
All right, great. So Alison, what I'm doing is I'm delivering electricity in a new way. I'm looking to make that first sale. I've got a big corporation who's going to install my system. I've got 2 Connecticut suppliers that can actually build my product, right? So when I make that sale, right, I've hired a Salesforce team, and we're pedal to the metal here. I'm thinking, okay, I make that sale, I've got to purchase not a lot of inventory, but enough for the customer, right? And so I'm going to be that guy showing up saying, hey, I need some funds because I've got a customer, I've got to buy this product, it's going to be made right here in Connecticut, and I want to start to grow that. And I've got a company, an international company, that's going to actually install that product, because I'm not that guy, right? I'm holding right now 4 patents. My 5th patent's on the way, and that's going to be me coming up to the table, looking for something. Any thoughts on that?
Yeah. So, I guess a question back also is, there's a lot of fabulous inventors that come up with patents, and then the next question is do you want to create a business around it and run it? Or do you want to do a licensing play and license it out, right? So there's there's so much to unpack there. So we do
Yeah,
know, I know a great
yeah.
guy like Bob Oros who does great things.
I
with
know
folks,
Bob, yeah.
you know, if
Yeah,
you want to
so-
license it out, but if you want to
so for
start a
this-
company.
Yeah, for this specific, this technology has a lot of different applications in different fields, but I see a licensing opportunity in this, you know, the lowest hanging fruit, if you will, in that market, and I would definitely license there. But then there's and it'll be a specific for that. Everything else that goes beyond all of that is just, you know, another deal afterwards, because this
Yeah.
technology, it's green, it's delivering electricity in a whole new way. We've never done
Terrific.
this before, so
So
it's,
I would
you know,
say when you have a pitch deck that's together, if you
Yeah.
are looking to like have a team and for it to be a company and you want to fund the company that is going to use that technology for a particular way, then send me the pitch deck
okay,
and
Okay.
I'll get it into the right hands of one of my colleagues that would, you know, that follows that space.
yeah, great, thank you very much, I appreciate it.
Yeah. Yeah. And then they can point you in the right direction. They can either say, you know, this is great and we'll try to figure out a proof of
Right,
concept
a
or
path, yeah,
or think about this, or this is who you should talk to, or
okay, terrific.
all right.
Well, I hope everyone will join me in thanking Alison. This is a great presentation, and I really appreciate your coming on and speaking with us. I'll be posting the video recording of this a little bit later, perhaps tomorrow or so. And I don't have anyone scheduled for 2024. So if
Oh.
people have suggestions, then maybe entrepreneurs or good stories that might be interesting for the group, I'd love to hear it.
Thank
And
you.
so-
Thanks, guys. And good to see you, Mr. Mattamore. Good to see many of you guys. So a lot of familiar faces and new ones. So thanks, everyone.
Same,
Thank you
Allison.
all.
Thank you,
Bye-bye.
Allison.
Good seeing you guys.
Thank you, Allison. Have
Bye,
a good
guys.
evening, everyone.
Thank
Bye-bye.
you.
All right, thank you.
Bye.